Hello and welcome back to Gbpjpy. Today we are going to be going over a loss that I took. I actually took three losses, but and a break even. A lot of traders like to shy away, or they don't very much like to focus on losses, and that is a problem because your losses are the foundation of your trading system. Of course, everyone's going to lose. Of course, you lose money the moment you deposit your funds in a trading account. The moment you press buy and sell on your MT4, losses are part of the game. They should become normal. If anything, losses should be the new normal because without losses, you won't or really wouldn't have the directional bias to a certain extent, especially if you're not necessarily trying to use too much technical, DXY or correlating pairs. I only stick to two pairs, so if I lose, I lose, and if I win, obviously it's good and it's great. But there's always something to learn at the end of the day. Why? Because it helps us understand why we have hindsight trading or hindsight back testing in our arsenal, why we use actual back testing after we know what we are looking for, we know what we are trying to identify. What people don't necessarily understand about hindsight testing is that is the checklist for any kind of trade, any kind of position, any kind of pretty much what I'm saying is you will understand why you took your losses, why the trade went against you, why you are against the trend, just by knowing how to hindsight test. It's crazy. It sounds like, what are you talking about? Understand you are trading the markets to learn about the markets, not to make money. The money is a byproduct. It naturally comes with executing your trading plan, whether that trading plan was against the trend or with the trend or pro trend. You can still make money. As you can see, I do lose. These are perfect losses. Not perfect, but I mean it's a loss. You feel me? A loss is a loss, and you can always learn from it if you know how to mark up and understand what you are looking for. It's very much a skill that really does come in handy because taking losses, believe it or not, that's a skill. Being able to bounce back from your L's, being able to embrace uncertainty to a certain extent and understand that losses are going to happen. Losses in life, losses in Forex, losses at many times during your lifetime, you will lose your absolute mind. Why? Because one, if you are trading Forex or doing anything that's ambitious or against the norm, you have to expect to lose. You have to. And you have to embrace that uncertainty, embrace that loss, and understand that this is a time to learn now. This is not a time for making money. Making money happens, okay. Pretty much understand there's a time and a place for everything. There's a time in these markets to make money, and there is a time to be quiet, sit back, and understand and observe and learn. That's the only way. It's the only way. It's the only way you get better. It's the only way you get your stop loss so tight. It's the only way you get maximum reward. You have to be willing to take that risk. You have to be willing to, I wonder if this is going to hold all the way down, or is it going to stop prematurely and turn around, break even, or stop loss, or however the case may be. It is normal. We all lose. Nobody knows what's going to happen in the markets. Nobody, absolutely nobody. And if you do, nothing is set in stone. Why? Because, I mean, honestly, with the news, first of all, this is a GBP pair. So whatever's happening in Russia is obviously going to affect its currency. It's just what it is. Again, there's pros and cons to doing literally anything. So again, just understand, and this is me, I'm going to say this again, understand you're going to lose. Understand that's a part of the process. Understand that you can only get better, right? So I took a total of three or four trades, I believe. They were all very much risk managed. I was just following my trading plan, or at least what I saw in the market at the moment. I'm only 1 hour, but in order to look at these a bit more closer, I will head to the lower time frame, maybe like the 15, so we can get a bit of more of like a range aspect. Okay, so I took this trade as well as this trade. I'm definitely not gonna lie. I was still calling bearish this whole time. Even though I did see these highs, I saw these highs as more of a strong or very strong high to a certain extent. So I wasn't necessarily worried about it. We got our reaction, and obviously hit a failure swing point, and it's fine. Price can do that. Price is allowed to do that. Take your loss and obviously move on. But people take that for granted, right? Because they want to take their loss and they don't want to review their trade, or they want to take their loss and they don't want to, or they don't know how to properly assess any kind of situation that's obviously negative or detrimental to your, I don't want to say mental health, but mental stability, especially when you're losing money in the market. Yesterday, or not yesterday, I want to say a few days ago, I put out a hindsight video. A lot of people didn't necessarily pay it any mind, and it's fine. However, I do have a question. How are you going to understand, how are you going to learn to identify something that you've never even known to see or known or been taught to see? That is probably your issue at this moment. How do I correct my mistakes if I don't know what mistakes I made? Simple. Hindsight. You have to understand what you're looking for. Now, I know a lot of people don't have, or usually don't have, the, I guess you could say, proper knowledge to identify liquidity, proper knowledge to identify an inducement. Understand that that's only going to come with time, especially on this channel, because I will be obviously talking about both of those. However, there are specific types of liquidity, specific types of inducement, or a specific type of inducement that forces early sellers, which in this case would be right here, forces early sellers into a short position and takes them out. It's natural. This market is fractal. It's going to set up a move that's going to take out a move, if that makes sense. You just have to accept it and understand that over the long term, it will, or it does work. So, what are we looking for as far as how to correct these markups? Referring back to the hindsight video, as you can see, we marked up, or we mark up in the video, ranges, liquidity inducements, POIs, and targets. Targets being obviously the highs and the lows that are untapped, untouched, untested. POIs being obviously blocks, imbalances, breakers, rejection blocks, liquidity, inducement. Again, obviously we will go over that in future videos, but for now, I will point out, what inducement or liquidity I do see that trapped me, or that I didn't necessarily understand to the furthest extent, and we will correct them. And also ranges, right? We need to know that we have the correct range, right? Because a lot of the times, especially when you're learning and you're just, I guess you could say, just getting into liquidity inducement trading, the ranges are confusing. It's the hardest part to learn about liquidity inducements. Why? Because that's the foundation of all you really need to know, right? Because when you have the range, you have external and internal range liquidity. So depending on your market cycle, obviously price is going to move in that direction. Price is going to raid or take out that liquidity and then move into appropriate direction for that market condition. I like to mark my chart up in red. It stands out a lot better to me, and I don't know. I mean, why would you fix anything in red? It's just so apparent, right? So we're going to start up here, and we're going to mark out our range, the liquidity inducement that was used or rated, mark out our POI, and obviously our target, right? So obviously targets are a big one here, right? Especially in trading Forex period, because you can definitely always make money in this market. You can make money by accident in this market. However, whether you choose to take your profit or not is on you. Targets are important because you need to understand where you're going to exit just as much as where you're going to enter. If anything, targets are more important because anybody can make money. You can make money in these markets by luck. You can make money in these markets by I don't know, pressing buy and sell. It's not hard. However, are you going to take those partials? Are you going to take those profits? All right, where are you going to, like, how are you going to plan uh, paying the trader in your trading plan? Okay, so this is going to be like a pretty small price action. I will go into the 5 minute for this entry, and I feel like this entry would be best done on the 15, but we'll get there obviously when that bridge is being crossed. I'm gonna go to the 5 minute, go to that first, or our first position. It seems like a lot, but honestly, I was just looking for liquidity. I can delete this, so I don't need that. But this is definitely so. Okay, so as far as a range, if we look behind our position that we took from here, you can see that price created a previous higher high. I mean, it may not have been the wick. It may not. I'm sorry. It may not have been the body because instead of this, like it was probably the wick. Let me take that off so you can see. You feel me? So this is a higher high. This is going to be a lower higher in this case, and obviously we got a choke as well as BOS. What does that signify? That signifies our range, high to low, right? So what did price do in order to take out liquidity or rein in so-called inducement? Price used a trend line, used it to draw price to a higher or more premium price, rated the inducement to the left, and continued lower. At that point, my position is break even. So it's pretty much like this. That's what I was really into settle for. As far as it being like right here to a certain extent. Okay. So as far as point of interest, right? Our POI, what are we looking for? Well, if we look left, we have a unmitigated wick being retested. Our range is valid or validated. So that means internal range liquidity must be taken out, right? It's just a range cycle. We are from this internal liquidity to external range liquidity. We broke a BOS. We had a BOS, right? Three candle formation, or in this case, a rejection block. Drew back up into premium pricing. If you are very, you can say talented, but skilled with a fib, all you got to do is mark your retracement level, and it should give you a decent POI, right? In this case, it's going to be a structural high on the lower time frame. So like on the lower time frame, you'll probably get a quasi or a QM or liquidity grab breaker structure, something along the lines of that that'll help this make sense. Again, you would have to go and check out my previous videos to understand what the QM is, to understand what a Quasimodo or however you want to call it, strong high, strong low. It's just different labels for the same thing, of course. Now that we have our range, our liquidity, and our POIs marked up, the most important thing we need to mark up or analyze, or not even analyze, I would like to say revise, is our target. Yes, our target. I initially was looking for these lows to be taken out, these slanted lows, or really just using my imagination, this strong low as internal range liquidity, right? Because we are in a bullish market and we are headed for internal range liquidity, and that was my overall target, right? So we didn't reach that low. We instead turned around New York session and established a new high. In this case, a weak high, which obviously got rated to a certain extent. And then that's where my break even came in. When dealing with ranges, especially when you're going counter trend or against the pro trend, of course, it is important to always target your internal range liquidity. What do I mean by internal range liquidity? If I'm looking at these candles to the left, right, whatever's happening right here is probably happening on like the seconds time frame that I'm not going to get into because I don't feel like it would be necessary if we have the price action right here. As you can see, price reacted to this rejection block. Simple as that. There's no other explanation that needs to be needed or said. It's literally saying, I reacted to this rejection block. I feel like this is enough bearish momentum. I'm ready to reverse. Simple as that. And for those who are a bit confused, I'm definitely talking about this rejection block right here, this one right here. This rejection block was enough to shift the whole entire market, and that's okay. It can do that, and it will do that. The key is to be aware. A beautiful trade, an amazing trade that could have profited, that could have, hit its overall 13%, or even at that, it could have hit its 15%, but it didn't. It didn't, and we took an L or a break even on this trade, which is fine. It can happen. Yes, my time was quote unquote wasted, but was it really when you're actually taking the time to understand what you are missing, understand what you are not necessarily paying attention to or thoroughly looking at? We have our strong high, weak low, internal range liquidity being taken out, this unmitigated breaker block. It looks like a breaker. I'm going to say breaker only because, not because it looks like a breaker, of course, but if I zoom in, what is this? Whoops. what does this kind of insinuate? And stay with me, don't get lost. Yes, we had a liquidity grab. We had a FU candle of whatever sort. But what's after that? Exactly. A breaker. So just use your imagination. It's again, get out of your technical minds. This is easy if you make it easy. Or I don't want to say easy. It's not easy. Trading is hard as hell, but it's simple to a certain extent if you allow it to be simple. Obviously, to confirm this range, we had a BOS as well as a choach as well as a BOS. Yeah, we had definitely had lower prices, and I'm actually happy with the trade that I did take because again, it bore. I mean, I didn't take a partial. I didn't pay myself yet because I was under the influence that prices going to continue down to lower prices. Of course, internal range liquidity. However, understand that there are obstacles that need to be, I guess you can say, tested. This was a rejection block that was tested, and it held. It can hold, most definitely. Now, as far as internal range liquidity here, I'm not gonna lie, this is a breaker. That's a breaker. That's a plethora of opportunity to secure partials, even if it's not necessarily 13%, right? The whole 13%, 11% is still amazing. It works. It's imagine 10% on an FTMO account, whether that be 50K, whether that be 100K, whether that be 25K. Imagine the return, especially on a consistent basis, especially when you know your rules and understand how you approach these markets on a consistent basis. It compounds. It works. I promise you. That's for that one trade. Let's move on to this next one. Okay, so as far as what I was looking at for this trade, I saw a liquidity grab, break of structure. That is a strong high to me. To me, I don't know. I don't know if you wake up on the right or wrong side of the bed and you just happen to see what you see at the moment. That's what you see. That's your trade. Whether that be right or wrong, that's your trade. To again win or lose. To again ignore or mark up and see where you went wrong or even where you went right and add to your arsenal. As you can see, price failed to break this previous low. It did. And that's okay. It can do that. Instead, it came back up, took out internal range liquidity, right? Again, this is just another pool of liquidity, whether that be a strong high, whether that be equal highs being taken out to the left, or however the case you may be, price failed to break, and it can. Now let's figure out why. Now let's look for our range. What makes this range so valid that we had to take, or we took an L, but we saw what could have been a potential dub? Price gave us a liquidity grab. That's a high. Give me a second. That's a high. Then we got a choke, retest, break of structure, and then retest. And obviously we had a continuation, right? Which made, for me, personally, for me, it made this strong low valid. I don't know. That's what I saw in the meantime. And I said, you know what? Let me see what this does. Price retraces. I definitely saw potential for a reversal right here. We didn't have it. I saw potential for a reversal right here. We didn't have it. And my last and final order, because I only trade per, I guess you could say per trade, I only trade like 3 times. My maximum reward, or say if any of these hit actual take profit, it's going to be maximum reward. You don't need to get those losses back that day or even that week sometimes, because a lot of the times it'll come back to you, and honestly in an influx or overflow. Why? Minimum risk, maximum reward. Stay with me. Now, when price when I was looking for price to reverse right here, I was looking for internal range liquidity. Where would the internal range liquidity be? I maybe imagine the trend line right here, maybe this obvious order block, or maybe even this wick that just stands out. That's what I took. I drew my fib, marked down my retracement, and took my trade. Now, price didn't go all the way down to my initial internal range liquidity. Why? Because it just didn't have to. As you can see, we have a strong high right here. Price performed a break of structure or a break and retest. What does that mean? That means price performed what seemed to be a imbalance and filled it in. Price found resistance, broke and then found support, failed to break this high, came back, used this as internal range liquidity or an inducement, took out that, swept it, and continued higher. It's pretty simple, right? And if it's not simple, it will become simple as I continue to repeat these steps or these movements in price. So enough of that flaw, or not necessarily a flaw, but that miscalculation. How could we have secured a better position? In this case, my point of interest was this rejection block. However, I understand that I can refine this to lower time frame. I guess you can say a lower time frame block to an extent and use that. So anything above that or above this 50 is going to be liquidity. Okay, so cool. So now that we have our range, our POI, and our liquidity inducement marked up, the most important thing about your trading plan is where you are going to exit the market. Where are we looking for an exit? We already understand why we needed to refine our exit on this previous trade. Now, how do we refine this exit on this trade, right? So as you can see, price formed a strong low, broke structure, maybe a choke, and then continued, broke major structure, maybe a BOS, and retraced. Simple as that, right? I know I personally saw this as a strong high, weak low. First, most definitely, it's very possible to I don't want to say confuse your ranges, but to pick the wrong range. It's very much possible. The markets are fractal. The markets create the same pattern over and over again, and that pattern will do what it necessarily is programmed to do, not necessarily what you want or what your trading plan is expecting, right? Because again, these markets are very much fractal. The same pattern for you that's a buy is the same pattern for somebody else that's a sell. And whether whoever wins, it really just depends on one, experience, two, psychology, and three, where are these traders exiting the market, of course. So yes, price created a strong low, broke internal range liquidity in this, I guess you could say, lower time frame structural high. At this point, price created a footprint. Remember what I said before? Remember that term? Price created a weak high. How is this a weak high? What makes this a weak high? Did price break a or the previous high? This one right here. No, it's a weak high. That's what makes it a weak high. So what is happening in the markets now? The markets have made a momentum shift, right? So instead of targeting next time, I guess obviously, instead of targeting these absolute lows or these what I presumed as or would be internal range liquidity, price was in more of a bullish momentum. As you can see, we have nothing but bullish blocks just sitting on top of each other. Why? It's a momentum swing. Price came back down, created a weak low, retested, took out that weak low, retested a bearish order block, rejection block, however you want to call it. So at this point, next time, I will target New York lows. It's just that simple. This is a strong low. This is a strong low. This is going to be liquidity because this strong low is very much valid. It's valid. What makes it valid? It's got liquidity, broke structure, retest. Got liquidity, broke structure, retest. Price broke a high. It didn't necessarily break a major high, but it broke a structural high that's, I want to say intermediate, but not necessarily. We'll just call it a lower time frame structural break for now. Now, in this particular, like it's about 8:45, about to be 9. I took a nap. I'm gonna be honest. I was tired. It wasn't necessarily too much, negativity in my mind. It was just I was a bit weary and not necessarily. I ain't gonna say I was not focused because, of course, you come to the markets to what exactly. So just know that there's gonna be those days that you're kind of like dragging yourself out of bed trying to figure out what kind of trade you were supposed to be identifying today. It is like that. That is the life of a forex trader. Understand it's not butterflies and rainbows and you just make money out of thin air. I mean, you kind of do at a certain extent, but understand that there's a lot of hard work that's put into it. It's not just, you know, press by yourself. No, 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 no. It gets very technical, especially when you take this industry very seriously and you're actually wanting to do this for your life. You want to make this a lifestyle thing. So what happens? Price mitigates this unmitigated wick or rejection block and continues higher, taking out the weak high as well as these equal highs to the left. It's a pretty simple explanation, but understand that whenever you do under or comprehend how these markets move by nature, you can take advantage. You can understand why certain things happen and then be like, okay, well, I'm going to buy instead. Or, okay, I'm holding a sell, but let me take a partial just because I'm not too sure that, this low is going to hold. Or, okay, I got a bit of a reversal and we took out lower time frame structural highs. We didn't take out a high, but even at that, it still means that this is a weak high. So at that point, where's the liquidity? Exactly. And for those who are still confused, I'm sorry. That is a smart money. This is smart money right here. It's going to be an order block being tested, and obviously failure swing happened, and yeah. So again, opportunities in the markets come a dime a dozen. It doesn't matter if it's smart money, retail, flags, M's, W's, Fibonacci's. You can make money in these markets a plethora of ways. However, will you keep that money? Will you be able to compound that money over time? Will you be, and at that point, it comes with discipline and understanding that things take time. It's not going to happen overnight. It won't happen overnight. It won't happen in a couple of years to an extent for a lot of people because, I mean, obviously that's your work ethic. And that's not necessarily on anyone but you, right? So this is going to be pretty much the markup that I have for this loss. Obviously, today is Friday, October 14th, but I took these trades yesterday, right? So on a Thursday. Not too sure why I expected it to come all the way down here, but I mean, I feel like if it can come down here, it can go a little bit further. However, it did it, and it's okay. It's all right. We learned from it. It became an opportunity to learn, and then that's better than any kind of profits because profits made, I don't want to say ignorantly, but profits made on accident is not profit at all, really. Because I mean, you're going to give it back. Why? Because there's obviously some flaw if you're getting profit and you don't understand why, right? There's some kind of issue. Yes, we have a break even right here, and we took like 2 or 3 L's right here, but I mean it's fine. It's all right. Again, guys, don't fight the trend. Understand that if price is bullish, it's going to be bullish, and it's okay, because we caught a bearish move. It's fine. Yes, decent, amazing trade. Oh my goodness, 13%. A lot of people can't even see 2%. God is good, and I'm very grateful. Understand that nothing is set in stone. Bullish momentum can come in just like that and, take away your hopes and dreams. Not necessarily. I'm just kidding about that, really, but understand that price is here to teach you majority of the times, especially in your forex trading journey or journeys, and you got to be open to learning because I mean that's the only way to get past or move forward in your trading journey. And if you shy away, if you don't necessarily want to pay attention to the not so good parts of your trading journey, which honestly to me definitely the most important parts of your trading journey, you will stay in the same place. You don't want to do the back testing, you will stay in the same place. You do not want to do the hindsight testing, you will stay in the same place. You do not want to take risk, you're going to stay in the same place. You do not want to move from a demo account, you're going to stay in the same place. You don't want to do what's necessary to become the aspiring profitable. Like the reason why you started trading in the first place, because of fear, doubt, intimidation, this, that, and the third, you will stay in the same place. And it's nobody's fault but your own. And it's just, I mean, this is a business. Like, this is a whole industry, and it's only going to grow. It may not be as respected at the moment, but eventually, yes, this industry will be busting for real. So keep learning, guys. Keep learning. Keep paying attention. Keep taking your losses. Keep marking them up. You know, it's four categories. You have ranges, POIs, liquidity inducements, as well as targets. They're only there to sharpen your skills, sharpen your eyes, help you understand, train your retinal activating systems to become better every day. 1% better times 36, 365 days. How much better is that? And that's 1 year. I have 4 years under my belt. That's enough of that rant. I hope you guys enjoyed this video. Yes, I lose. I lose. If anything, I lose a lot. I've lost so much in my trading journey, you don't understand. A majority of it was on demo, and I thank God for that. Why? Because I mean, I understood the risk, the actual risk of trading, and how much this can actually scar people's brains to a certain extent. Why? Because it's a single player game, right? And at a certain extent, you are responsible for your journey, and nobody's going to come and save you. So you must, and you have to come to the realization that you must be your own savior. I hope you guys enjoyed this video. If you did, hit that like button. If you want to see more losses, or not gonna I would definitely try not to lose. But if you want to see more in-depth videos of how I mark up my losses, my losing trades, as well as my winning trades, I could definitely do that as well and make a playlist. Definitely leave that down in the comments below. Let me know how you felt about this. Did you appreciate this video? What did you learn? What kind of concepts are you going to apply to your own personal training plan? Thank you guys for tuning in. And as always, y'all have a good night.